Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth stock analysis on Bed Bath & Beyond, ticker BBBY. Now obviously back here we know what's happened here. This was a big short squeeze, this is a big momentum pump, especially this one here. So obviously since then, unsurprisingly, all we did has trended down. Again, this was basically expected. We told you all this in the previous analysis videos, especially when we were doing them when this was moving. But what are we really looking at going forward? So obviously we are sitting at a 52-week low around $2.50. If we pull up our standard deviation, which is our technical charts, what am I paying attention to? So really we don't have all that much support going lower. The only support line I have is at $1.90, and that's our statistical mean on the 1 year. So that's really the only support I can see going lower. So how am I really looking to trade this? And that's, we're seeing short interest increase. Again, doesn't mean there's going to be a squeeze, but I wouldn't be unlikely, like we've seen before. Reddit pumps it once again. Again, if we see that, potentially a squeeze. Not something I would ever put all my money in, because again, it is a lot more of a gambling way to be trading. But if the probability and kind of the risk management makes sense, then there can be trade opportunities, and that's really how I'm looking at it now. The calls have got quite cheap. Premiums have got quite cheap. So again, I could be getting some calls out, to around $6-10. They'll be relatively cheap. If nothing happens, cool, they expire worthless. I would only put in what I'm quite happy to lose in the trade. But if we do get a short squeeze, those will go up hundreds of percent. So that's really how I'm looking to trade this, through options, not holding any shares. Like I say, with all these hype stocks, I'm never holding any shares because there's just a lot of risk on the table. And more than likely, holding the actual shares, you're more than likely just losing money anyway. So options will be how I'll be looking to play this. And basically, I'll be looking to play it how I did when we were back here. But instead of trying to only catch the top, which we did, the main way I'll be looking to trade this is trying to catch the premium increases by buying some calls probably relatively soon. If it doesn't move again, expire worthless, not the end of the world. If it moves, can make good money. And if we do get the pump, and again, I wouldn't even really care if I don't take this trade, because the easiest trade on these are always just when the move happens, when it pushes to these highs. Again, puts are usually quite expensive, but if they're cheap, look to just trade the puts. But if they are expensive, we're looking to trade the credit spreads, because again, you can usually get at least a 1-to-1 risk to reward, get a few months out expiry. It's not going to hold up at say $30 for more than a week or two. So getting, an expiry out 3 months on a credit spread to say it's going to be below $30 on a 1-to-1 risk to reward just makes sense. But if we do push up, what resistances will I pay attention to? So 275 is our statistical mean. Again, I'm never really looking to trade within this area. If I'm buying the calls, it's a bit different because I'm not buying the individual, and I'm just kind of a bit of a gamble in that it will squeeze. But if we do break out of this, really the only time I'm going to start paying attention to this stock properly is if it hits $6.50. If we go higher, $8, then I'm paying attention to $10, $15, $14. If we go any higher, it's going to be $18, $20, and a final target at $26.40. So basically, off my technical analysis, I wouldn't expect it to come back to that previous high of around $30. So I would be looking at more trading these levels. Again, probably just hitting them in with options. These would be day trades. Anything really below this third deviation, I would be looking at as day trades, so $10 and below. Once we start hitting this $14, we are getting quite overbought, and that's when I was starting to hit these trades with the options as more of swings, doing the credit spread strategy as I spoke about earlier. Anyway, I hope you enjoyed the breakdown on Bed Bath & Beyond. If you did, why not drop a like and subscribe and check out this analysis video.